Hey, listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available? Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO David Parker from New Rubber Technologies. New Rubber Technologies is the leader in devulcanization and reformulation of innovative and unique rubber materials, compounds, and OEM manufactured goods. New Rubber Technologies is currently a private company with potential plans to go public in the future. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Great to have David back. Trevor and I spoke with David at least 6 months ago, maybe a little bit longer. But we thought it was a unique opportunity to present to our listeners today. A lot of chatter around recycling products, anything environmentally friendly, any sort of technologies that allows us to reuse some, let's call it waste products. So happy to have David here to sort of update us and to introduce the company to our listeners. David, I'm going to hand it over to you.
Thank you very much, Trevor and Paul, and thank you to whomever else might be joined on the call as well. I will spend probably about 15 minutes or so describing our business, and then I understand there'll be a chance for questions at the end. I don't think there is an opportunity to interject questions in the interim, but if there are questions in the interim and that is a capability, I'm certainly happy to host those as well. So with that, thank you for your time and potential interest. Let me jump right into a review of who we are and what we do and what's perhaps of interest about it. So NRT, excuse me, I'm just trying to figure out how to scroll to the next page here. Why is this not working? Paul, is it still the first page?
It is the first page, yeah.
There we go. There we go. Now it's finally moved. So NRT is a company that is well positioned between enormous and varied end markets and a plentiful feedstock of waste materials as its supply. And that position I describe as being well positioned as a function of our core enabling technology, which Paul mentioned is devulcanization, which is a capability that's built on specialized materials science in conjunction with a vertically integrated business model and operation that allows us to convert polymer waste into value-added materials and products. We are fully commercial, producing revenues and growing those revenues, growing our fulfillment capability in terms of both capacity and variety of end products, as well as our personnel and infrastructure more generally. Why is our material plentiful? Our material is ostensibly waste tires, as well as what I describe as post-producer rubber waste. That is waste from manufacturers of things other than tires. But focusing on tires for a moment, estimates suggest that there are as many as 1 billion tires that come off vehicles annually. That is a staggering amount of material. The challenge is that it is very difficult to recycle in ways that reach the larger addressable markets. And because of that, in North America and Europe, which are the two most progressive recycling jurisdictions globally, depending on whose statistics you believe, somewhere between half and 2/3 of all waste tires are just burned as fuel to derive the hydrocarbon content because there isn't an ability to beneficiate the material and allow it to be used in some of these larger addressable market opportunities. So enormous amount of waste and a crisis in terms of an ability to reuse that waste. Why is there a challenge to reusing that waste? It is because of the core chemical makeup of rubber. Just to say it simply, unlike plastic, rubber does not melt at temperature. So while plastic is difficult to recycle, given the number of different streams that there are and the source separation that's required, in the case of rubber, there is not that challenge, but there is a chemistry challenge, which is that once the material is cross-linked, which is what Charles Goodyear invented, which is to take a material that begins its life as a super viscous liquid and turn it into a solid and into the sorts of products that you conceive of, be it tires or hoses or mats or what have you. Once those cross-links are created, unlike plastic, you cannot just melt rubber. If you apply heat to it, it'll first scorch and then ultimately burn. So what is our capability? At the core of what we do is this devulcanization capability, which is the ability to largely, not completely, but largely reverse that vulcanization process that Charles Goodyear invented. That means break the material back into a super viscous state such that it can be reused in some of those original applications. Wrapped around that core technology is what I generally describe as reformulation capabilities. And that is, what I mean by that is taking the first order devulcanized material and adding the little tricks of the trade that are required to compensate for its deficiencies vis-a-vis a virgin rubber material, and to make it suitable for specific applications, which we'll get into here in a minute or two. The applications that are addressable once you've been able to take waste rubber and devulcanize it and turn it into that super viscous liquid once again are enormous, and they're varied. So in aggregate, they approach about $500 billion of market opportunity, and of which in excess of 75 billion we think is addressable today based on our existing capabilities. And that'll grow as we continue to refine our technology and our capabilities. The applications, as I said, are varied. They include the largest opportunity, which is virgin rubber displacement. It includes the replacement of selected what are called thermoplastic elastomers, which I'm going to call TPEs. I'm going to use that acronym from this point forward in this presentation. Selected plastic replacement, as well as the modification of plastic and plastic and asphalt. And when I say modification, what I mean in the case of plastic is making plastic less brittle. And in the case of asphalt, adding a host of capabilities which either make roads better or improve industrial applications like asphalt roofing shingles and the like. But you add all those end markets together and it's a staggering size. So not only are we able to address all these different applications, but we're able to do it in a very environmentally responsible manner. I think it's probably fairly easy and intuitive to understand the benefit of landfill diversion that we bring to the table, but we're also bringing the diversion of this waste stream going to incineration. As I mentioned previously, somewhere between half and 2/3 of all tires are incinerated for their hydrocarbon value each year in North America and Europe. And so too, post-production waste, for which there is much less regulation, and in most states and provinces in North America, it's treated simply as general waste with local municipal rules applying. You add all those together, it is a staggering amount of waste that either is incinerated or landfilled. But not only that element, but our capability allows us to make a replacement amount of rubber or TPE with much less greenhouse impact. We've had a third-party study corroborate our investigations of this matter, and those investigations yielded that we have an offset of between 3.5 and 4.25 tons per ton of our production, depending on what the specific end product that we're manufacturing is. So this enables higher value recycling because it allows us to go into some of the same applications from which the waste is originally derived. And to give you a little bit of a pictorial introduction to what those applications and end markets are, they're presented to you here. They are, in terms of complexity, at the hardest end of the spectrum, tires. At the other end of the spectrum, in terms of complexity or less complexity, would be flatware like mats, and then everything in between. If you think about, excuse me, this has jumped ahead here. Excuse me, I'm not sure why this page is jumping ahead, but in any case, our capability not only allows us to recycle into original applications or downcycle or into different and equal or higher value applications, it ultimately will enable a different modality and a different element and add-on element to this business model, which is what we call closed loop recycling. That'll require additional plants beyond the plant that we have today, located in geographies that are proximate to the end user. But in that modality, the idea is that we would go to a manufacturer and locate a plant between a number of their plants and collect their waste, granulate it and devulcanize it and return it to them to reincorporate into their own operation in roughly an amount that is equal to their current waste rate, and therefore reach that equilibrium. This opportunity is a staggeringly large opportunity, not previously described in those market statistics that I referenced. To give you an example, one of the 10 largest rubber manufacturers in the world, that's a North American headquartered and based company, shared some information with me in terms of their waste streams, and doing some interpolation at the time, it leads me to believe that that single company, admittedly one of the 10 largest in the world, but that single company throws out about $50 million worth of rubber a year. So when you think about NRT, don't just think about tire recycling opportunities, think about this post-production stream that is just massive. So what's different about our business, and what differentiates us and is going to maintain our competitive advantage as we look to monetize this opportunity that I'm describing? It is first key material science and process technology capabilities. All of that capability is built on fundamental formal IP, i.e. issued patents in all of the major rubber consuming geographies of the world: the US, Canada, Mexico, Brazil, the EU, China, India, Hong Kong, Taiwan, et cetera, et cetera. On top of that is built informal intellectual property, and by that I mean trade secrets, which in my view is the best combination to have in terms of IP, both formal blocking IP for those that respect the rule of law, and subsequent learnings that are kept trade secret for those that don't obey the rule of law and afford one protection by virtue of keeping those secrets. In conjunction with that capability and the protection of that capability is this vertically integrated business model that I've described. And that allows one to control waste streams. It allows one to add incremental dollars of profit margin per unit of waste that you beneficiate. and allows you to get closer and closer to the end customer. The business model is ultimately to monetize our opportunity in roughly a 1/4, 3/4 manner, meaning 1/4 through the sale of products in this completely vertically integrated manner, and the other 3/4 through the sale of materials and intermediate and closer to final materials, which will allow us to penetrate the market more broadly with less capital. I mentioned previously that we are a fully commercial operation. We are located about 30 miles east of Detroit in a building that is about 200,000 square feet. We occupy about 130,000 square feet of that space today and have the option to occupy the remainder of that space. Our operation is generally characterized by about a metric ton per hour of devulcanization and compounding capacity. We're currently in the process of installing another 1.5 tons of compounding capacity here, which should be online by the end of Q1 of this year. And we'll be looking to expand both our granulation and our compounding capacity further through the course of the remainder of 2022. Down below, you see some pictures of some of the equipment that we utilize. Again, that first picture is our devulcanization line. The second picture is our compounding line. And those pictures on the right-hand side are the various kinds of molding machines that we use. Where we're located puts us within about 8 trucking hours of 80% of the US population, even though we're on the Ontario side of the border. We're equidistant between Akron and Kitchener, which are the headquarters of the US and Canadian rubber industries, respectively. So we're very well positioned geographically and from a logistics perspective, and have a significant ongoing operation, which is, as I mentioned, growing, and we're looking to accelerate that growth. I'm trying to forward the page here. We have received funding from an organization called Sustainable Development Technology Canada. It is a federal program that awards matching grants to companies that it believes qualify on a merit basis because they are developing a sufficiently interesting environmental technology, which in their view has an economic viability of sufficient scale to actually be relevant at the end of the day. We received a commitment to provide us $4.5 million, of which a little more than 3 million we've received to date. And that matching funding is what is defraying the amount of capital required for our compounding line expansion that I described moments ago. And I apologize for this page continually having a mind of its own and scrolling by itself. But point being, there is supplemental capital that's non-dilutive to shareholders of this business. And I think we've demonstrated an ability to reach a couple of pockets of this sort of funding, and will continue to do so. In summation, what is NRT? It's a business that addresses a very, very significant market opportunity with a plentiful waste stream. It is an existing operating company with approximately $8 million of US dollar revenue last year, and we are anticipating significant growth this year. And given those characteristics, I would describe our business as a growth stage investment opportunity. Again, we have significant barriers to entry for the business that will protect our path forward as we go after these very significant opportunities. So with that, I'm going to conclude the formal part of the presentation and hand the mic back to Paul for any questions that you may have.
Perfect. Thanks so much, David. I do want to remind everybody, if you have a question you'd like me to ask David, please use the chat function and I'll do my best to ask the question and have them answered. David, let's go back. I sort of missed, I couldn't take notes fast enough, but the key products that you guys sell right now, once you've sort of broken down these sort of the waste material, what's your sort of like, what's your best selling product? Where do you get the bulk of your revenue from as far as product?
We sell a number of industrial as well as matting, as well as safety products to various industrial users, as well as, in the case of our landscaping products, to Sam's Club in the US. So aggregate those together, it's all molded goods that use our material. This year is the year that we do two things. One, we expand beyond what is largely an OEM manufacturing model today, with our one branded customer being Sam's Club, where we actually sell under the NRT brand. So we're going to grow the proprietary products, meaning our own branded products this year, as well as add our materials sales. And to give you an example of the materials sales, in Q2 or Q3 of this year, depending on the timing of this compounding line capacity installation, we expect to go commercial with our first asphalt shingle roofing manufacturer. That's where our material goes into the bitumen, which is the liquid portion of asphalt, which then gets mixed with an aggregate to create what you conceive of, presumably, as asphalt. And in that instance, to just give people a frame of reference of the technical enablement and what it means, in California and Ontario and some other progressive jurisdictions, crumb rubber, which is just ground up tires, goes into roads because those provinces and states mandate it. That's a commodity that sells for cents per pound in the teens. What we're replacing when we go into asphalt is a much more highly technical material called styrene butadiene styrene, or SBS, which sells for about $1.20 a pound. And this initial customer that we will commercialize with has shared with us that we'll be able to replace somewhere between 40 and 60% of that SBS with our material at the get-go, and that will work to then increase that substitution ratio. So today it's predominantly OEM manufactured products, not even leveraging our brand, but in the case of Sam's Club, morphing into more branded products this year. We've just hired a head of sales and marketing to do that. We'll brand it separately from NRT under a name that's more relevant to the verticals and tie it only to NRT in terms of the material capability, and that will be the Revive Right inside trademark that we'll use to connote that the materials have been recycled and recycled responsibly. So morphing from mats to all sorts of different things here in 2022.
Perfect. Let's talk a little bit more about the sort of the competitive landscape. There must be somebody else doing something similar, or what give us a sense of who else is out there, what they're doing differently. Just where are you see competition as far as taking this waste material and providing product?
Yeah, that's a multifaceted answer. The first answer I'd say is that the primary competition is really the status quo, because we're displacing the existing way of business being done, which is to either use virgin polymers or to use what's called reclaim rubber, which is predominantly manufactured in China and India. The process of making reclaimed China is illegal in North America and Europe because it's so environmentally harmful. But that is competition. A lot of products here in North America are manufactured from reclaim. But I think as we translate here into the new world order that seems to be coming out of this pandemic, where people have a sense of the value of onshoring and security of supply, and recognize that there is an alternative that is not only more environmentally conscious, but on a delivered basis is cost competitive, I think that companies like ours will flourish. So there, the point one, virgin rubber replacement is modality number one that we need to combat, and that's an opportunity. Number two is reclaim from China and India, and the amount of reclaim from China and India is staggering and shows that there is the demand for material like it, and as such, there should be demand for a superior and better cost performance material that's geographically proximate. Now, very specific to devulcanization, there are other companies. I think I would say two things. One, we're the only one that's fully commercial with revenues, growing infrastructure, et cetera, et cetera, et cetera. If you look at who's out there in terms of devulcanization, you'll see a reasonably long list of competitors, but what they're trying to do is they've developed something in the lab and they're trying to license it to somebody. They said, we've figured out something pretty cool, we think. Now you go figure out how the rest of this all works. And I don't think that's a very good business model. There is, I think, the next most credible company out there is a company called Tyrema, which is coincidentally also based in Ontario, that is exclusively focused on tire manufacturers. At some point, they will succeed and they will break in, but it has been a long haul for them. And I think the shareholder base has probably turned over given how much capital they've consumed, which is why we've pursued a very different business model. But they are credible in terms of their technical capability. I've presented at the same conference as them. We shared information. I know what their cost bill of materials is. Ours is better, but they are a very credible player. And it's going to take tens of companies, if not more than that, like us and like Tyrema, if there is to be any material dent made in this modality change and waste stream absorption.
Yeah, no, I'd agree with you there. I think the market seems to be so vast that you need as many competitors as possible just to deal with the issues. Let's talk a little bit about the business model, because there is that option right now. You sort of you own the business outright, so to speak. End to end. Why aren't you licensing it out? Why could you not sort of establish a scalable capacity here by licensing out to other players?
Yeah, it's a very good question. Our intention is to license beyond the North American shores principally, and we do have interest in licensing on two different continents, discussions that are ongoing at this point. Within North America, I think it would have to be restricted to a particular end use and with a customer that is large enough and commits to sufficient volumes of use such to make the royalty payment stream worthwhile. But yes, you are right. It is a very capital efficient way to leverage the foundation that we're building as an owner operator, and one that we do intend to utilize in conjunction with closed loop recycling, perhaps joint ventures with certain larger, bigger customers in those closed loop sorts of operations. So yes, selectively in North America we'll do it, but only in a way that adds to what we're doing and doesn't compete with us. And then in foreign jurisdictions, principally Europe and elsewhere, we will only license.
So you mentioned last year you did about $8 million in turnover revenue. What's your current capacity? Like, how much could you do out of the existing facility you have right now as is?
It's a little bit of a nuanced answer because we have an imbalance. Once this compounding capacity comes online that I mentioned, it'll add somewhere between high teens to 25 million pounds of capacity a year. The commodity that will come off the end of that line will be a 75 cent to $1 a pound kind of commodity. So, there's 10, 15 plus million of revenue that could come from that line, but we need to backfill with additional devulcanization capacity and additional granulation capacity to feed that line.
Mhm.
So with additional expansion that'll be complete by the end of this year, presuming that we're able to line up the capital to undertake it, we will have certainly north of $25 million of capacity in terms of, dollar equivalent value of
Mhm.
capacity.
Gotcha. And how can we look at the business like in terms of what it costs to set up a facility right now and what the economics are of that facility? How can we, how do we measure that? If it costs, let's say, $10 million to build a facility, what's the payback?
Yeah, it's actually it's surprisingly short. If we talk about a ton per hour, just to
Mhm.
keep a measure of consistency,
Mhm.
A plant that just shreds, granulates, devulcanizes a ton per hour, presuming that you're going into a building that's got some of the electrical feed capacity, what have you, good
Mhm.
surrounding ancillary infrastructure, you're looking at about $5-6 million. And that operation is going to be capable of generating revenues north of $5 million a year, somewhere in the $5 to $7 million of revenue a year at margins that are very attractive. I think I'd just like to leave it at that, but the payback is less than a couple of years.
Okay, perfect. That's great. Here we go. So your growth plans, give us a sense, you want to, the current facility, you want to expand, you want to add some new technology to be able to get, better and bigger throughput. But what outside of that, what's next? What do you see as the next big step for you guys to expand your business?
Yeah, it is to grow within the four walls that we're in, and it is then, and then that by itself is a very significant opportunity. I mean, we think that we can fulfill a book of business of about 150 million from within our four walls today.
Oh, wow.
Then you add these satellite operations that are for closed loop recycling or for pursuing an asphalt modification customer, be it in California or Alabama or Michigan. Those are sort of the states that we're focused on in that respect. Or other big customers that are in asphalt roofing or making rubber goods or TPE goods. So it's really about building out the business within our four walls, adding satellite businesses focused on specific customers and applications with offtake agreements that underwrite those expansions. It's licensing, to your question before, and it is there's sort of two long balls to pursue, which we'll begin pursuing, one of which we've begun to pursue and the other which we have not. The two long balls to pursue are the modification of asphalt in roofing. In industrial uses, it's a commercial decision, much easier to navigate a commercial labyrinth, if you will, than a regulatory labyrinth. That being said, with paving, you've got municipal, state, or provincial, as well as federal regulators that have a hand in the definition of specifications and what ultimately happens in those markets. Based on technical testing that we've done, third-party corroborated, we know we bring significant value to the paving market, and that ultimately we will play in that market, but pun intended, that will be a long road. That is going to be a 3, 4, 5-year implementation to be at volume. The second large opportunity that's out there is the tire opportunity. Tires are a very, very group of tools, right? You've got off-the-road tires, you've got pneumatic tires that have very different requirements. Going around a corner at 90 miles an hour is very different than a mining truck tire that's got to stand up to and have enormous abrasion resistance. We play better in some of those pockets versus others, but to be in pneumatic tires that have to go around a corner at 90 miles an hour, there are technical limitations there. We could only substitute based on our capabilities today. We believe in the high teens proportion of polymer. And I think that while I think that there are equally as big and perhaps more interesting opportunities, i.e. the asphalt paving opportunity that I described, I think ultimately, if you're going to be a public company, there is just a visceral understanding that's going to come from the investment community at large when one is able to describe that you're going back into tires specifically. And I think that that will bring value in and of itself, but needs to be balanced with the core profitability that I think is better in some other market opportunities that we're pursuing.
I should have asked this question earlier, but what's the genesis of this technology? Where did it come? Where did it come from? What's the history of it?
It's the brainchild of my chief chemist, our chief chemist, who is a biochemist. He's worked his entire career in the rubber industry, but because he's a biochemist and was educated that way, he looks at all the issues that are raised through a different lens than the rubber industry has traditionally. And that's why we've come up with a devulcanization capability, which is a chemical mechanical implementation where the chemistry is actually FDA approved as a food and medicine ingredient. It's in decongestants, it's in pizza and other things. And our chief chemist has worked for tire manufacturers, large rubber manufacturers, large rubber compounders. So he has experience with large companies. And I dare say he probably didn't fit into some of those companies very well because he's a free thinker that we've been able to, whose capabilities and creativity we've been able to harness. So it is his brainchild and our support around him, testing and trialing and bringing the tools to bear to be able to implement it in a way that's efficient from both the process as well as an economic perspective.
That's fascinating. Let's talk about the sort of the current ownership structure and just past financing. How did this business get put together, and how have you funded it to date?
I'm the majority shareholder. The business to date doesn't have any institutional investment beyond smaller special purpose vehicles that have been put together by groups. A couple sort of notable folk. One group is led by a gentleman that used to run the e-commerce business of Walmart. He was the CEO of CNET before that. So he understands technology. He's not a technologist, but he understands fit, form, function, price, value in a mass retail context. And that's what motivated his investment in the business. We have another gentleman who was the founder of Montgomery Securities and Thomas Wise were partners after that. So to summarily describe the other investors, I would call them friends and family, but I am the majority shareholder and have put up the vast majority of the capital for the business.
Are you able to tell us roughly ballpark how much money has gone into the business since day one?
Yeah, equity dollars, about 16 million. Government support dollars, about 5 million, non-dilutive. And we have an operating line as well as an equipment line of debt, which together about another 5 million.
Okay. Perfect. And on your horizon, longer term, you guys are looking or considering the idea of going public? Is this something that could be public one day?
That is correct.
Mhm.
That is correct. Yeah, I think that there are elements of the business model that we're looking to, well, I think there's a lot that we've already proven out and we will continue to prove out over the next few quarters. And I would say, I think if I had a bias, it would be to be a little bit more mature before accessing the public markets. But ultimately, we will need significant levels of capital if we're going to really accelerate and go after some of these much larger opportunities than we're pursuing today.
Mhm.
And I think that sort of capital is probably most readily available in the public market.
Yeah, exactly. So listen, crystal ball, looking out into the future, what do you think this business looks like 5 years from now? And I'm not looking for numbers as far as revenue, but give us a sense of, what markets you're in, and what problems you're solving 5 years from now.
I think it's the problem that we're solving for the customer is just, whether it's a problem or an opportunity is I guess just semantics, but we are providing a whole host of customers across different verticals, not only in rubber, but in thermoplastic elastomers and asphalt modification and plastics modification, a better cost performance solution. And it's not only a cost performance solution, but you then wrap around that it's made onshore, that you've got security of supply, that you've got security of the absence of volatility, right? This isn't a petrochemical that swings widely on a futures market in Japan. It comes from a waste stream. It has a predictable level of cost that gets added to convert it. And we can, within reason, much better manage our cost structure in volatile material pricing environments. So we can provide the customer assurance of supply, assurance of much lesser volatility in terms of pricing, which I think is appealing. And you wrap around that the environmental benefit. It is not only an environmental benefit, but that translates into marketing collateral for the customer. And if they can achieve and procure that collateral while improving their cost performance attribute or quotient, it truly is a win-win. So I think that's the combination of factors that we're bringing to a materials consumer. And then on the molded product side, we're looking to complement that material science with innovation at the product level. So I mentioned I just hired, started January the 1st, a VP sales and marketing to run our matting business. He spent 30 years in the matting industry. We have all of the competitive products and the sub verticals that we want to go after in our conference room lined up with the list of what's good and bad about each of these products and how we want to compete against them. So I think it's really about bringing innovation at the material level as well as the product level, and then bringing infrastructure to bear to be able to leverage that innovation and deliver it in an economically interesting way.
You mentioned the term security of supply over and over again. It's amazing how often we're hearing that lately with logistics issues and supply shortages and sort of the offshoring of so much of this capacity and now needing to bring it back home. So I think you've touched on something that we're really familiar with as well, and we're seeing it firsthand. Listen, assuming we were, investors or owners of the company right now, what kind of catalysts do you think you guys can provide, say, over the next 12 months? What would somebody look forward to seeing from your business in the next 12 months?
Well, I think you're going to see new materials. You're going to see new customers, which represent additional proof points of capabilities in very large end markets. We have those proof points. We have a collection of those proof points, and you're just going to see more of them. And you're going to see more fulfillment capability to be able to actually get across the bridge and fulfill in volume behind those proof points. Those are the two complementary elements of the business that I think we'll see much greater evidence of as we roll through 2022.
Now, okay, I see one question that was going to come in just before I was going to ask you my last question. Is there enough steady supply of tires within a reasonable distance to continually supply a fully expanded plant?
Yes is the short answer. It's a great question. I talked about the massive supply on a continent-wide level. The questioner is exactly right. It's very relevant to ask what's available regionally. Because we are located in the part of the country that we are located, and the trucking logistics are what they are, we today pull in our waste material from as far as Indiana, some from Michigan, but the vast majority does come from Ontario. But we're not captive to Ontario, being only 30 miles from Detroit. We're not much further away from some big metro areas in the US as we are to Toronto. So we have plenty of waste material on both the tire side, and then we have a supplier of production waste, a company that makes test tube stoppers, so a very high value rubber material. To give you an order of magnitude, we bring in millions of pounds a year. They're wanting to send us 8 truckloads of this waste material in January. It's and that's actually it leads to another important point, which is you need a certain scale and level of infrastructure to be able to turn on these supply streams. And this is where the vertical integration is important. We go to this post-production manufacturer, and we want to convince this company that's got a market cap, in the tens of billions of dollars, that we want to start taking their waste. They don't give you the chance to say, well, okay, you can take what you'd like when you'd like it. It's all or nothing by plant. So we're now taking all of the material from their first of, double-digit number of plants in North America. And we've got all sorts of places to leverage and use that material. If you don't have that scale, both breadth of infrastructure as well as breadth of customer and applications, you don't have the opportunity to go and convince that customer to start sending you their waste, because they don't want to change their habits unless you can take all of it. And so that's an important point to make about supply that goes beyond the questioner's question with respect to tires. There are other elements. This post-production stream is very important too.
Sounds like it. Listen, we're wrapping up right now. We're coming to the end. David, what we like to do for you guys is always give you the opportunity to give a parting message or sort of a key takeaway that you want everybody to understand about your business. What would that be?
I think, in short, that we are at an inflection point. We have proven out our technology. We have improved our technology. We've scaled our technology. We can grow it with very modular and bite-sized capital expansions. We today are capacity constrained and have more customer demand than we can fulfill. And our growth is really limited to our ability to broaden and deepen that fulfillment capability. And that's, in short, just means adding capacity. Yes, there are new formulations. Yes, there are new customers. Yes, there are new applications to come, but they're all based on a set of attributes that exist in this kind of a polymer world that we, by virtue of having been in it for almost 10 years, understand very well. And we will continue to use our chemists as well as our operations team to develop further these additional opportunities to grow the business on an accelerated basis. And we think we have a unique capability, both in terms of the level of technical innovation that we provide, but also that it is uniquely protected with both formal IP and with trade secrets and know-how. And I think that it's a capability whose relevance is growing.
Mhm.
I think that whereas 5, certainly 10 years ago, the winds were at best at one side, perhaps even in front of us, I think those winds are now starting to turn and starting to blow behind us for lots of different reasons. There's an appreciation of the importance of environmental and manufacturing responsibility. And if you can do that in a way that also solves customers' problems, which we can, I think it's a powerful solution.
Mhm. David, we typically see a lot of sort of new technologies like this that come in front of us, but very few that are already commercialized. Now, you guys are well established, you're commercialized, so there's no technology risk here. This is just now an execution risk. You're looking for growth capital to grow on something you've already clearly been able to commercialize. So congratulations on that. If any of our listeners want more information, what's your website address and what's the best way to contact you for more information?
I'll see if I can bring it up here on the screen, but my email address is D as in David, dparker@newrubbertech.com. Our website is www.newrubbertech.com. And I would encourage people to send emails to me if indeed they would like some additional information. I'd be more than happy to follow up.
Fantastic. We've been speaking with David Parker, CEO of New Rubber Technologies. David, it's been great speaking to you today, and thank you so much for the update.
Thank you very much, Paul, Trevor, for hosting me and giving me this chance. And thank you to all your listeners for their time, and my apologies for some of the technical glitches here with the presentation, but hopefully some of the core content of the message was delivered regardless. Thank you all.
I think it went well. Thank you so much, David.